So, are you keen on investing in international funds? Do you have the right appetite to digest volatility that a portfolio brings in when you expose it to an overseas fund? If your answer was yes, then here's a good news for you. SEBI has opened international investing doors again for mutual funds, and in lieu with that, Mirae Asset AMC has announced that they will be accepting fresh funds from their existing shareholders, a select overseas fund of funds. Now, what's the minimum and maximum amount allowed, and which funds are these that we're talking about? Let's get you all the information from Siddharth Srivastava, Head ETF Products, Mirae Asset Investment Manager. Siddharth, good evening. Welcome to the show. So tell me one thing, SEBI, the regulator, has actually tweaked this notification guideline that was issued earlier this year in February, saying that if there is redemption in these particular international funds, the AMC can introduce fresh inflows. Tell me something, what kind of inflows are you planning to introduce again, resume again, and what are the funds that we are talking about here?
So Kavita very rightly said, SEBI has not revised the limit, so it remains at $7 billion for international investing for mutual fund industry, an additional $1 billion if industry is investing in offshore ETFs. So that remains. But SEBI has allowed AMCs to take fresh inflows in case they have seen redemptions, and they are allowed to basically take the book value of these funds to the extent what was there as on 1st of Feb. So we have had very limited amount of redemptions because most of the investors and across all these three schemes are still invested, and rightly so, because typically international investing is long-term in nature, considering not only the equity markets, how they behave, but also for tax reasons. But there have been some redemptions, and we have certain room across all the three schemes. It's not much, but we feel that there were a lot of investors who wanted to average out due to the recent market corrections, and there were investors who wanted to actually invest for the first time at these valuations. So for both set of investors, we felt that this is a right time to open these international schemes which we have without any restrictions in place, and these schemes will remain open till we have that room available. Now the schemes under questions are six schemes. So we have three international ETFs, one of which tracks NYSE FANG Plus Index, which basically tracks 10 big tech companies in an equal weighted manner. The second one we have is S&P 500 Top 50 ETF, which tracks top 50 companies of the US market. And then we have Hang Seng Tech ETF, which tracks 30 tech companies listed in Hong Kong. So we have two ETFs which are based on US market, one on the tech side, one on the broader market side, and one ETF which provide exposure to Hong Kong listed companies. Along with these three ETFs, we have three fund of fund which invest in these ETFs individually, and we have opened that also. So in case of ETF, investor can buy and sell on the exchange just like stock, or come directly to the AMC in a lot size. In case of fund, it works like a normal mutual fund. So investor can invest in a lump sum manner, any amount which they want right now. And we have also opened the SIPs, but that is only open for the existing investors.
Yeah, which is this was my second question to you, because I wanted to understand the mode of investment that's open. So it's only SIP, no lump sum and STPs?
Yes. So we have opened basically everything which was earlier open for the investor before SEBI restrictions came in place.
So, Siddharth, let's just focus on the redemption trend also that you saw in these international funds. From an investor's perspective, what would have been the reason, or what kind of redemption are we talking about over here?
So we manage funds on the domestic side also. To be honest, we haven't seen any reasonable redemptions from these funds in last 5-6 months. As I mentioned, that when we are selling these funds, we always mention that these are international markets. You need to stay invested for 5 to 7 years. And from a taxation point of view, it makes sense to at least stay invested for 3 years at least. So we have room available, which is in low three digit in terms of the room we have, CRs, but in terms of redemption, I don't see any trend where someone has come and panicked and sold off. So I think that's a healthy behavior we have seen from the investors who have not panicked and sold out. I think most of the people will typically would like to see what is happening on in the international markets. Some will try to average it out, and in fact, before we allowed everyone to invest in any quantum, we initially opened these three schemes with a restriction of 2 lakh rupees per scheme per day, so that anyone who wants to do a smaller quantum of investment, especially we were concerned about retail investors, that they should get the opportunity to participate. So we first opened all these three fund of funds with 2 lakh per day limit, and now we have removed that also.
But talking about the investment outlook and investment demand in these kind of funds, do you think it is upbeat, and this should be the reason why the regulator should actually revise the limit that's capped?
So I personally think that international markets provide significant opportunity to take exposure in companies which are such dominant players in various segments like tech, like fintech, etc. There are companies which are leading so many disruptions across multiple domains. Indian markets, we know it, are very small portion of global equity market. So more than 95% of market exists outside India. So if you want to create a prudent portfolio, if you want to explore opportunities which are globally available, Indian investors should be allowed to invest in external markets. We understand that these limits may be revised in future, with which these channels will open again. But we continue to be bullish on international markets from long-term point of view. Having said that, recent turmoils due to inflation, rate hikes by central bank, uh, bond market volatility is obviously concerning. So while short-term view is obviously much more muted, we have to see how next 2-3 quarters pan out. But from a long-term point of view, I think global markets will be a good wealth creation avenue.
Now, I'm sure it's very difficult for you to tell that till what time these funds would be open or till the time you hit the limit.
Yes, it's very hard to say. Actually, Kavita, it can be for few weeks only if we get a reasonable lump sum investment in these three funds. As I mentioned, that limit is not huge. It may carry on for 3-4 months also. So it's very hard to say till how long these schemes will remain open.
Guide our investors and viewers on to as to how should they look at international investment in terms of going through a mutual fund. How should they decide on picking up the right international fund or an investment exposure?
So first of all, it is important to understand that the headwinds, the issues which we are seeing in international markets haven't played out. There are still concerns, as I mentioned, around inflation, around rate hikes by central banks to curtail that inflation. Similarly, we are seeing carnage in the bond market. Expected earnings of companies have also come down for the market in general, and we believe that markets will continue to remain choppy in coming quarters, and lot will depend how next round of data sets will look like on inflation and on job market. But having said that, this provides a reasonable entry point if you want to take global exposure. Nasdaq 100, for example, is down by is down by around 30%. So if you look at uh, earnings multiple, if you look at the current levels of the market, it provides a reasonable entry point. What investors should do is first look at his or her investment objective and risk profile. And only if it aligns with a given international fund, he should invest in a concerned fund. For example, it is also important to understand that different funds may behave differently in these times. For example, a tech-centric portfolio is expected to be more volatile in rising interest rate scenario rather than a market agnostic fund. So if you want to play a bit safer, a market agnostic portfolio is probably better. If you want to probably take higher risk, then probably you can opt for a more tech-centric portfolio. From return point of view, I think investors should not expect anything reasonable in next year or so, and they should only invest if they want to remain invested for at least 3 years or more. And in these current markets, in choppy markets, no one can tell you what the bottom is. So staggered investments are the best form of investment.
That's a guideline for international investment, and if at all you've been wondering when will Mirae Asset again resume their offshore funds for subscription. So that's a good news for you. It's currently open. You can resume your SIP and other forms of investment. Thank you so much, Siddharth, for making time and guiding our viewers on this.